Hello, dividend growth stock investors. It's Colby, the DGI Crab, coming at you with some good news on a Saturday morning. Now that we've gotten into the month of May, it's time to take a quick peek back at the month of April to see what dividend increases have hit the portfolio. DGI Crab is a unique dividend growth stock focused channel in that I'm only concerned with 60 high quality dividend growth stocks split into four separate categories or tiers based on the age and timeline of the investor, which I believe is the most important metric that any dividend growth stock investor should take into consideration when deciding what stocks to purchase. So I'm not going to take up any more of your time with that. Remember, I'm not a licensed professional, so do your own due diligence before you invest any of your hard-earned money. So for tier one, we had a increase from Parker Hannifin, stock ticker PH. So tier one stocks, that grouping of them for the 18 to 30-year-old investor, are going to be lower yielding stocks, generally yielding anywhere from maybe just as little as maybe 0.75% on the low end to maybe 2.5% on the higher end. Parker Hannifin has not been trading cheap for a while now. Good reason for it. It is a dividend king, well over 50 consecutive years of increasing that dividend without fail. And what we want to get out of these stocks, because we're getting such a low yield, is really aggressive year over year dividend growth of at least 10% or not or better. And we've gotten that with PH. So this is a solid one here. They go from 652 per share to 720 per share, which is a dividend increase of 10.43%. So right in line with what we want in this particular age category, where you've got lots of time in the market to let these 10% or better annual dividend increases really add up and snowball over time. Now, for tier two, our age 31 to 41-year-old investors, generally with this group of stocks, I want to see a starting yield anywhere from 2.5% to 4%, with a high single digit growth rate in the 7, 8, maybe 9% range. We got one this month from Fastenal, stock ticker FAST, one of the best stock tickers out there, if you ask me. Now, they gave us a small dividend increase this time around. They go from $1.72 a year to $1.76, which is just a 2.33% increase. The Fastenal is kind of an interesting one in that they do some special dividends fairly consistently, not every single year, but more often than not, it would seem. And sometimes they'll do more than one increase in a year. Again, that's not every single year, but sometimes they do. So while this 2.33% annual increase is on the it not only is on the low end, overall it's disappointing for this particular category, but I'm not going to draw any conclusions about this increase until I see if they do a special dividend or perhaps do another similar increase between now and the end of the year. Just have to wait and see on that one. I'm always going to be happy with the dividend increase. Better than staying flat, and obviously much better than a dividend cut. But the story may not be over in 2025 for the Fastenal dividend, but at least we've gotten an increase just here starting out. Now for tier three, when we move into that age 42 to 53-year-old category, we want to get a little bit higher starting yield, generally nothing below 3%. We want to get like 3.5% to maybe up as high as 5%, depending on what it is that we're buying. There are three dividend kings here, stalwart stocks in the dividend growth stock community. Definitely ones that you can sleep very well at night having in your portfolio. Now, for this group, I'm generally expecting to see dividend increases in the 5 to 7% range, and that's basically what we have here with these. Procter & Gamble, stock ticker PG, gave us a nice 5% dividend increase going from 403 a year to 423 a year. Johnson & Johnson, stock ticker J&J, has gone from $4.96 to $5.20, a 4.84% dividend increase, a little on the low side for Johnson & Johnson. They're usually good for around 5 to 7% most years. This one just about hit that 5%. Johnson & Johnson has traded down a little bit here and there over the last 6 months or so. And anytime it dips down below $150 a share, I'm usually pretty good to go ahead and add that. PG and J&J are two of my 10 favorite dividend growth stocks that are out there. They are not the most exciting companies in the world, but if you add to those positions consistently when they're trading down and gradually build up good solid positions at a nice per cost average, you are going to have steadily increasing dividend income, even at the point where you retire and you're not reinvesting your dividends anymore. And then finally, Cisco, stock ticker SYY, actually did the best of the bunch here. They go from 204 to 216, a 5.88% dividend increase. I will take this one all day, right to the bank. 3 excellent stocks. It just can't go wrong really with any of them. Just make sure, you guys, when you're purchasing your stocks, you're not reaching and picking up things that seem to be trading at a premium. You just got to be patient. Grab the stuff that looks cheap when you can get it, and then when it gets to be a bit overvalued, hit the pause button, continue reinvesting those dividends, and shift your new money that you're adding in over to something else. But I tell you what, these 3 are great ones to have in your portfolio. I've had the opportunity to add some to Johnson & Johnson below $150 a share over the course of the last few months. Very happy about that. And my my average cost on Johnson & Johnson is in the low 140s. That's really where I would prefer to keep it over the long haul. And then finally, for tier 4, our age 54 and older investors, don't have any April dividend increases announced for that particular group of stocks. But not a huge problem there. Your 54 and older investors, you definitely want to get some higher yield when you're buying your dividend stocks, 5% or better in most cases. And you still want to get some growth out of the dividend, but you're not going to be expecting with the high yielding stuff to get high single digit dividend growth, at least not on a consistent basis. You're going to be looking at stuff like your Realty Incomes, your Verizons, your Altria Groups, things like that, where you're going to get very small year-over-year dividend increases, but a much higher starting yield. But for right now, nothing to report for this group for April. If you're curious about the stocks that I have selected for the channel to focus on, I do an update every Sunday going over each of the 60, seeing where the value lies in the portfolio. I invite you to check out some of those other videos here on the channel. If you're new here, please like and subscribe. And if you're a fan of the channel, I encourage you to tell your friends. If you're part of any investing communities, you might throw a kind word out there for DGI Crab. I'm trying to grow the channel, but I don't want to constantly be begging for subscribers or asking you to do a lot of favors for me. I am here just to spread the good news of dividend growth stocks and trying to grow this thing organically. But anything you all can do to help me out, I'd really like to hit that 1K subscriber mark here by July, because that's going to be the 1-year anniversary of the channel. And that's just a goal that I have for the channel. If I hit it, I'll be very happy. If I don't, I'm not going to be discouraged. I'll keep churning out content here for you guys and grow this thing organically and hopefully get a nice community here going. So let me know if you own any of these stocks down there in the comments below. Let me know what you all are exciting to buy here as we get into the month of May. And then, of course, come back on Sunday where I will go over each of the 4 tiers. And you can see all of those stocks that I've selected for the channel. Till next time, this is Colby, the DGI Crab. Be patient and persevere through all of this crazy stuff in the market, you guys. We're always just looking for value. We're happy when our positions are up. And for the ones that are down, we're adding new money to them. It is win-win when you're a DGI investor. Take care, everyone.